Welcome back to the Dividend Diplomats YouTube channel. You've got your favorite dividend investors out there, Bert and Lanny, guys. Happy Easter, happy Sunday morning. Get your coffee flowing because the Dividend Diplomats are going strong this weekend, putting out content, putting out videos. No sleep for cash. Money doesn't sleep. We don't sleep. We continue to make money, save money, invest money, guys. That's the drill here. And guess what, guys? I'm doing something I never thought I would have done. After years and years of investing, I've joined the club.
Smash that subscribe button. Give this video a thumbs up. Let's get right into it here, everybody. Lanny's joining a club. The question is, which club?
The Jelly of the Month Club. Thanks, Mark Griswold. No, but guys, I mean, Bert buys a certain ETF every single week. Many of you guys buy it every single week, every single day, every single month, every single week. You know, I'm touted as the best dividend ETF out there. You know, not to say that that is anywhere official, but a lot of investors out there coin it. Yep, I finally have joined the Charles Schwab high dividend ETF of SCHD, guys. Lanny has joined the troops. I'm joining with Bert. I'm joining with you guys out there. I probably was the only one that I know that is a dividend investor that has ETFs that did not have exposure directly to ACHD.
So all you commenters out there that said Lanny's going to join the club one day, Lanny, we know you're going to join. I know there are a lot of you out there. We see your comments on all these videos. It says, Lanny, just join SCHD. Do it. You better relish in that comment section below because Lanny has officially joined the club. Lanny, what were some of the deciding factors? Like what brought you to this decision? Because obviously,
right.
Something clicked.
Yeah, something made me go, motherfuckers. No, I'm kidding. Yeah. I woke up on the wrong side of the bed, obviously. No, I'm kidding. You know, again, I just looking at the portfolio and, you know, there's positions that I'm like, they're not, you know, that, again, I own a lot of stock positions. You know, again, I've trimmed a bunch down in 2024 and I'm hoping, and I just did trim positions down here in 2025 as we'll get into. And then I've had goals for my portfolio. You know, yield's a little bit over 3%. The dividend growth is somewhere over 5.5% on the dividend growth side of things. You know, total return's always been fine overall. You know, some years I've outpaced the S&P 500. Some years I haven't. You know, especially earlier on in the investing career, I was always, to be honest, I think I was beating the S&P 500 at least like 7-8 years in a row. But you know, now we've gotten, you know, more experience. My time commitment to individual stocks has gotten less, and it just has gotten harder to keep up with individual stocks. So I'm going more the ETF route. So I also had the goal to go 50% ETFs in my portfolio. I'm in like the low 30s. So enter SCHD, you know, that has a current yield that is better than my overall portfolio yield. It has proven time and time again that despite what happens on that stock price performance, the dividend growth 85% of the time is solid, better than my overall dividend growth, sometimes by 2 times, over 10, 11% dividend growth. You know, which is why Bert's been crushing it, buying 20, 30 shares a week of stacking SCHD. I think you got what, almost 2,000 shares now of SCHD. You're over.
I'm closing in on 1,500 shares of SCHD.
Yeah.
So yeah, yes. Goal 2,000 by the end of the year is where I'm trying to trend right now.
So treading towards 2,000 by the end of the year, which is amazing. So,
but you are right. I mean, SCHD's dividend growth to corroborate that, it's been great. It just had one bad year. It had the one bad rebalance. I think it was 2023. Their dividend growth was off, but they came roaring back. They returned back to the average high single digit, low double digit dividend growth that a lot of people loved about them after they shook out some of the bad years.
Yep. And part of that is, you know, stock price performance wise, they've been pretty, you know, I call it laggy or lagging. Yes. You know, again, historically, you know, they've done very well, 9, 10, 11% on average return. But they've actually trailed my, you know, ETF I've been buying every single week for 5 years.
Yeah. And it's
VYM.
catching up to them. When you looked at them on the 5 year, we'd always talk about this. SCHD was great on the front end of that 5 year, and VYM crushed on the back end. And now that the front end of that's rolling off the 5 years, VYM separation's catching up. This is
Yeah.
getting bigger.
Yep. So I'm like, okay, not to say that ETF is undervalued. Like that's always weird to say, but I just, at some point I'm like, all right, maybe it's a value proposition now with what's in the portfolio, and maybe with the lagging couple of years, maybe now is a great time to lock in some yield on cost on the ETF. So, at first I decided I wanted to do at least $25 a day in the SCHD starting on April 16th, Wednesday. So I did just that. But then I'm like, well, that's not to say that's small, but let's try to reconfigure kind of what I do. Again, I do 300 every Monday in a VYM and then 150 on Wednesdays in a VYM. So I actually reallocated the 150 weekly VYM on Wednesday and said, okay, that's an extra $30 a day instead I can do to SCHD versus doing that. So I'm shifting that 150 to SCHD, and that's going to add in a net impact of $1.56 more in dividend income versus what I was doing into VYM. Losing the $4.58, but gaining the $6.14 with SCHD by buying it, call it an extra $30 there a day.
Love it. And that's the beauty of what you're doing on your SoFi platform, which you've talked about how you move everything to. If you're looking interesting, throw that link down there. Everyone check over if you want to
Check
make
the
this move.
description. Maybe we'll pin it.
Yeah, and it lets you also get into the daily buying, the automation of that. Lanny, that's fantastic though. I mean, if you're putting so much in every single week, this is a good time to get it. That price is at $25.42. So you're right. It's a value play. It's down 6.95% year to date. It was trading at its peak around $28, $29 per share. You're catching it at a little bit of a down point. So the automated investing is going to help you catch some of this low, no matter where it's going.
Yeah. And again, doing $55 a day. Again, I'm doing the 25 new investments every day, the 35 from the VYM. So in total, again, guys, I'll be doing about, again, $55 a freaking day, guys, really stacking it up right there. 200, what is that, $75 a week. So adding somewhere around that, $11, $12 a week in dividend income from SCHD. So after 52 weeks, I'll have about $6,500, added from just the additional investments. Again, I'm not considering the 150 since that's just the shift.
Yeah.
But I wanted to make a bigger splash, guys. So that's like I'm joining the SHD club. Yes, lift your jaw off the ground. It's true. VYM and SCHD will coexist in my portfolio. I'm not stopping to VYM, $300 every single Monday. But I also wanted to make a splash as well. And I actually added 164 shares right off the rip on the 26th. I sold two stocks. I sold Hormel and I sold Diageo. I'll have around a $400, $500 net long-term capital loss from that, but they both yielded low. They both had terrible total returns, and they had lower expected dividend growth. I just didn't think that they were going to return as well as what an SCHD ETF could.
Yeah, and this is the benefit of adding an SCHD, which gives you a little bit more of a yield boost compared to say like a VIM or somewhere else that's in the right around the threes. VIM's yield is around 3.8%. Hormel at the moment, yield is 3.84%. So the yield, you're not really losing any yield going from Hormel over to SCHD. Their 5 year growth rate is 5.929%. You're picking up dividend growth there, right there on the money. So if you feel better about the long term prospects, yield neutral, growth positive, that's a great flip right there for at least for on the Hormel front. And same story goes for Diageo too.
Yeah, and actually, I think if you look at SCHDs, I think trailing 12 months, Bert, I think their yield's actually over 4% right now.
Yeah. Well, I was going off the rebalance. Like the rebalance they had, it just depends wherever you take it from. Like they rebalanced it, it went to 3.8. It's probably up, you're right, to 4%. Okay, so it might be yield positive. Whatever it is, you're not losing, is I guess the overall point from that.
Yeah. So again, we're going to have to really, really see how Hormel and Diageo play out. Great companies. But personally, I was like, hey, two less positions. So I've got net down one on my stock position chart, which is great. So that's it, guys. I am in the SCHD club doing $55 every single day, buying, approximately 10 shares a week there, guys. Let me know what you think about the SCHD moves, exiting Hormel, exiting Diageo, and I have a few others up my sleeve at certain price points that I'm also looking to exit.
Yes. All right, everyone. Let us know your thoughts on all of this. And remember, subscribe to our channel. Give this video a thumbs up. And remember, you are either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.